Morning, Market Chameleons, and anyone else joining us for the first time. And there he is, the King Chameleon, Dimitri Pargamonic, for a Q&A Friday. How are you doing, Dima?
Good morning, Will. How are you?
Great. The disclaimer's up. Let's disclaim away.
Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's a disclaimer.
All right.
And let me share my screen.
You're going to hear something in the background. I don't know if everyone hears it, but I got to start this webinar so we can give people access to the Zoom. I did put the link to the Zoom in the chat. So anyone who does have a question, wants to come over and ask it live, please come on over. All right, Dima.
Yep. So today we're just going to take questions if you guys have any on, Market Chameleon tools or, some analytics, anything you've seen out there trading that you weren't expecting, you could bring it up. Two ways to do it: either put it in the chat, Will's monitoring it live, he'll read it back to me, or you could click on that Zoom link that will take you over to Zoom, raise your hand. You could ask the question directly. You don't need to turn on your video camera. Those are the two ways to ask. So while we're waiting for some questions to queue up, well, what I'll do is I'll start out with the pre-market report. We'll see what's moving in the pre-market hours. Maybe I'll just mention some things that, other questions that I'm getting through either like the emails or chats. So we'll start out with those and see how that goes. Sound good?
Yep, perfect.
All right, so this pre-market report, these are stocks that are trading in the pre-market hours. We have the most active stocks, the biggest percentage gainers, biggest percentage decliners. I see 85 made our percentage gainers list, 201 on the percentage decliners. So from this perspective, it looks like we're looking at a weaker bias at the open. I'm going to take a look at the S&P 500 stocks to see if we see a different situation there or something similar. So using the filters up top, we could do in ETF. So I'm going to drop that filter down. This gives me a list of ETFs. I'm going to select SPY, which is the S&P 500 ETFs, and then this list will get filtered by S&P 500 components. And we see here 8 made the percentage gainers list, 52 on a percentage decliners list. So, we are seeing a weaker opening right now, based on this. It's not a huge list, but a little bit bigger than we usually see, at least in the last week or two. One notable thing, I think Apple was up yesterday and they're talking about, are they going to compete with Tesla? They're going to create an autonomous car. Did you hear about that, Will? I'm hearing both, and I'm hearing Tesla might create a smartphone. So,
yeah.
Are they like just
Tesla and Apple battling out with their? Both have such strong followings in the consumer mind. There are people who absolutely love all Apple. Everything in their house that can be Apple is Apple, and
right.
Tesla could be the same thing.
Yep.
People love as long as the technology performs.
They got it. Exactly. Let's just take a look. I'm just going to take a look real quick what happened in Apple yesterday. Let's bring up an extra session here. I'm going to go in here and just take a look what happened in Apple, because I know it's been, hovering right around $150. And then it started to kind of climb right out of there. And there it is. I guess that's where the news was here. It's been climbing above and finally just kind of broke out. But yesterday up 2.9%, right around there. So I think that's what the news was, that they're coming out with technologies. Are we going to have, Will, you think cars just driving us at some point? Is that where we're heading?
I do believe we will. I've actually seen it in action. Anyone driving down the road passes a Tesla and has looked over has probably seen an instance where someone is being driven by the car. It already exists. It's not supposed to be, used. It's but it does exist in the product. I know when you pre-order the product, you order that technology is an add-on feature, and for a, I don't know, $50,000 to $60,000 car, it's another 10 to 15 grand for that technology to be part of the car. So I do believe they're the furthest along in this. I know there's different car companies have different ideas about how they're going to do it. Tesla, the car is it's like AI, right? It learns.
Right.
Where some cars, it's in sensors and cameras and built in that way. So it's going to be interesting, but I do think, and you look at the trucking industry is ripe for it, right? That's the place where you could get initial passage and, help an industry right away. So it'll be interesting to see.
I've even seen like they have these little cars that deliver pizza, these like little robots that just deliver pizza, just so they're not huge, they're just on wheels, and they deliver. You kind of walk out, grab it, and then it just drives away. So it's pretty cool. People are getting
excited. You've seen that on the streets of Philly?
No, I haven't seen it on the street. But
I've wondered if those are actually in use anywhere. I mean, I could see them in an urban environment working really well, actually.
Yeah. Well, Amazon is also working on, right, like delivery systems. They got drones trying to fly things around. So
I think one of our early episodes, I think if you go back to episode 4, I think the only person on it was maybe Mike Chandler from Texas at that point. But episode 4, my brother brought up a new patent that Amazon had applied for and received. And it was a blimp that basically took the light out of the sky, this huge blimp, bigger than any blimp that's ever made. And basically the blimp was a floating warehouse, and it was stuffed with packages and drones, and it would just fly over communities and distribute the packages via drones.
That's incredible. It's going to be incredible. So I'm just going to
watch out for that blimp coming over your neighborhood soon.
So while we're waiting, I don't know if there, questions coming up. This is your chance to ask questions, but I'm just going to take a look at, any sectors right now that have been kind of outperforming. So I'm going to take a look in the last 2 weeks. So here's an interesting one. Department stores have been doing well. I think Macy's actually was a big one. They reported pretty good earnings. But you could come down here, performance by industry, and if you're just looking for a certain sector that is looking where money might be flowing in, that's performing well, you could do it in here. Performance by industry. One thing we're thinking about doing also is, besides grouping them by industry, grouping them by themes, right? So we are talking to vendors, potentially having organized themes in there where certain stocks, right now they're getting kind of pushed into one category, but they could have different themes. Could have a stock that's, social media, virtual reality, AI. So creating these themes, I think, will narrow things down as well. So something that we are looking to do. We'll see what people say out there. Maybe even take suggestions for themes. But I think that definitely there's right now we do see people kind of moving and trading that way. But a couple other ones, that gold looks like in the last 2 weeks did well. Silver, lumber, and wood production. So semiconductors, they've been talking about them. So you could come down here and kind of just take a look at which industries have been performing well relative to each other. Anything coming in, Will?
No questions yet. So what industry is the top performer in the last?
Well, right here in the last 2 weeks, if we just take the 2 weeks, department stores, I think a lot of it had to do though with Macy's. So Macy's reported, well, here's Dillard's. So you could see here in the last 2 weeks, we got 5 stocks in here, 2 of them, over 20%. A couple of them 9%. So it looks like what people are back out shopping, right? That's what it's saying. People are back out. They're going to stores. They're shopping. So that worked out well for the department stores. Luxury goods, up 9%. So let's just take a look there. So here you got a list of them. All of them are up in the last 2 weeks, right? And let me just see best performer here. Real. I'm not sure. I'd have to look that up, but you can take a look.
I think that's a tech. The way they market their product is maybe. I don't know if it's a website that like sells used high-end clothing or Gucci bags, that type of thing. Tapestry's another one that was
like luxury brand.
Yeah. Well, I think Tapestry actually is a reseller of used luxury goods, as is Real. Interesting.
So take a look, but again, we want to see if we could organize them into themes. I think Jake was actually pretty good. I know he works on his watch list a lot, organizes things according to certain criteria, certain category. So we'll see. We'll maybe going forward start doing that as well. So far, some of these they'll fall into a category, but again, once it gets into one, that's where it stays. I think certain companies can belong to different amount of themes, right? Besides this, there was one thing that came over that I wanted to mention, and this is a person said something like this. I'm trying to find a foolproof strategy, right? So by looking through data or analysis, wants to do something that's foolproof. And again, we've been talking about this for the last couple of days, but it kind of means like you don't really understand risk, because what does that mean, foolproof? With the risk, it's not foolproof. It's just knowing how to manage risk, how to trade risk, how to use valuation models and statistics to get an edge. But when you're trying to do something that's foolproof around risk, then maybe, and I'm bringing this up because I feel like I've heard this before, and sometimes people will take data and try to simulate a trading through historical data, as if the historical data going forward will behave exactly the same way, and then you kind of get into this where you're kind of wasting time. So I'll give you an example. Like somebody's like, well, let me use historical data and use stop losses here, buy orders here, there. So you could almost create a model that would trade perfectly on historical data, but that doesn't mean that's how the data goes forward, right? So you're like, just all you're doing is just modeling a historical pattern, but that doesn't mean it goes exactly like that. So it's kind of how you use data, how you use statistics, and how you use metrics together to help you. But when people say things like that, where I'm trying to create this perfect, foolproof, bulletproof, strategy, I think then, which I think that they're insinuating that they're never going to lose, that it's foolproof. Whatever they do, it's going to work out, that it's profitable every single time. And I think that's a waste of time, because then you don't really understand risk. It's like trying to say, I'm going to be a poker player, but I'm going to win every single hand. I'm going to have like this foolproof strategy that I win every single hand. Then you don't kind of understand poker, because you don't understand that that's not, or trying to play basketball and saying, I'm going to, every time I throw the ball, it's going to land inside the hoop. Then you kind of don't understand basketball, because then you're trying to do something that's not possible. That's not the way it's played, and that's not how people win the games. So does that make sense a little bit? Just wanted to kind of mention that, because I hear that repeat.
Yeah, no, that's helpful. Trevor was asking, is there a way to download the sectors?
So let me think here. You might, if you use the stock screener. So we do allow you to download the stock screener, and in the stock screener, I do believe you have the sectors in here. Right, so you'll be able to narrow it down, kind of just use it this way. So from the stock screener, you do get a lot of data that you could do further analysis on. Right, so that's probably off the top of my head the fastest way to get to it.
Excellent. And it's funny that this question is popping up from our friend Rob from Chicago, and it's pretty cold in Chicago, it sounds like. But he's asking, will crypto end cash? I guess he's asking your opinion. He's asking, will crypto end cash?
Oh, end cash?
End cash. Yeah.
Well, I mean, definitely we're following it, and I do.
I mean, you and I were just talking about it before the show, because the MicroStrategy CEO was on CNBC and talking about how, I mean, he's just literally a buyer. Any extra cash the company have will be purchasing Bitcoin, basically.
Coinbase. Yeah, and I think that what's happening is that when right now we have a system, it's kind of a legacy system, and it works one way, right? And it works around this huge regulatory infrastructure, through this huge technological infrastructure that was created. Like, I think a lot of it was from the early 2000s when things started to go electronic. And now we have the system in place, and there's never another system to say, well, we could do it better, right? Because you can't go outside this regulatory bubble that they created, right? Like if you look at the exchanges, you got Reg NMS rules, you got listing rules, you got all this stuff going on, and there's no way to say, well, if we change some rules, it would be better. Because why can't we do it? Because you would need a system side by side, working side by side to see which one is better, right? And so far, if you look at all the SECs, if you go to the SEC, they do all these different analysis and saying, well, this rule is good because we save X amount of money to retail investors, but they don't do a study side by side. So they assume, right? They make this assumption because all their studies are done based on one system, right? There's only one system of doing things. There's only one system of listing stocks. There's only one system, of trading stocks. We only have one system of borrowing and lending stocks. So it has to go through there. And what we're seeing now is that all of a sudden there's a new technology, and with the blockchain. And what's the amazing thing about the blockchain is it's allowing it to do what we are doing right now. It's doing it in a better, more efficient way. So you'd have to understand kind of the backend system, how things work, where a lot of what's going on is what's happening is when you move a stock, right? You're buying and selling a stock. You don't see what's going on in the background. But there's this whole clearing thing going on in the background where, if you bought a stock, right? So what has to happen is, first of all, there has to be a verification that somebody owned the stock that you actually bought it from, and that when you take money out, you move it to him, you actually have the money, and you can't double spend that money. So once the money moves out of your account, you can't spend it again. So all this stuff is going in the background, and it's very expensive. It's opaque. I think the SEC is now coming up with a new rule to make the stock loan, that whole business more transparent. So there's going to be more reporting requirements. But when you compare these two systems and you're seeing like, hey, look what they're doing in the blockchain versus what our exchanges are doing, it's pretty incredible, because what you're seeing is a lot more efficiencies. and benefits to investors that we're not getting. And like one example is, on the blockchain, you could prove ownership, right? So you really own the asset that you bought. With a stock, if you go and buy a stock right now, you kind of don't control it. What happens is it's in street name, right? So you buy, like, let's just say you have a broker, you're a retail customer, you buy a stock and it's in your account and you feel like, well, oh, I own this stock, but really it's held in street name. And what does that mean is that you're not in control of it as you think you are. It's actually your broker, and he actually controls your asset. So to give you a, like, maybe I'll paint an example, but this is kind of what happening. This is what's happening right now in the background. I'm going to put up my MS Paint. And this is going to be a problem also now, maybe even for the SEC, but let's just say you have a broker and your broker bought you this house, right? Just like a stock, right? Well, a house, right? You could, when you own it, you could do whatever you want with it, right? You could rent it out, right? And earn income on it, or you could go borrow against it. Let's say you have equity, you could go borrow against it and take that money and spend it, whatever, but you have an asset that you actually control right now and you own. Now with the stock, right, that this is your house, right? Let's say a house. This is what's happening right now with your stock. Your stock is held in street name, right? And what happens is it goes into this pool, and usually it's controlled by maybe a handful of banks. A handful of banks are really controlling the stock loan department. And what they do is say, well, we actually own the rights to run out your stock, and they earn that money. So when your stock's held in street name, what's happening is that market makers are using that stock, banks are using that stock, hedgers are using your stock, short sellers are using your stock, but that rent is not going to you, that's going to the bank. Do you guys see that?
Yep.
This is going to be a big problem. I'm just giving you some of the things that blockchain, when you're doing it on the blockchain, it's different. You own it, right? So they can't just take it from you that way. They actually have to pay you rent, just like if they rented your house. So right now, like, think of it as like you own a house and your banker is kind of sitting there enjoying it for free, right? So that's a lot of, but what else is going on? Well, you can't borrow against it, right? So right now, this is what's happening, right? If you have a house, you put it up as a collateral, you get a second mortgage, you borrow against it, and you're going to get a good interest rate because you could shop it around. So what's happening with the stock is, as a retail investor, you have this Reg T, right? Reg T. So you could go borrow about, you put up $1,000 in an asset, right? And what do they let you borrow? $500, right? Something like that, like half of it. I think something like that. Or you could buy, or wait, you could get $500, you could buy $1,000 worth of an asset. But as a retail investor, you're probably paying, I don't know, what is, like, anybody have a guess what the retail investor is paying to borrow? Maybe like 11%, 12%, I don't know, right? Because you can't shop it around. It's stuck, it's stuck in there.
Well, and a retail investor isn't getting it when they really want it.
Right, but you're paying maybe
really the stocks that are really showing up that you want to, maybe do something in the options. It's not available to the retail traders.
Right, like in options and stock, it's not available. So you're paying probably, like, say 11%, maybe 18% interest rate to borrow against an asset that you put up half the money, right? It'd have to go down by 50% before. So you're really over collateralized at that kind of point. So how does that compare to a bank or professional? And this is what I think blockchain is going to start to solve. So you're paying 11% and you're putting up, half 50%. Well, if you take like Citadel or Susquehanna, right, for every $1,000, that they're buying, well, first of all, they're only putting up, I don't know, maybe like $70. I figure, I think it's like 15 to 1 or something like that. But let's just say, even if they put up, $100, right? Let's say they put up $100, they're borrowing 10 to 1. By the way, this is Charlie Munger. This is why they want to protect their legacy systems, right? Because they're getting all these advantages. So, and what are they paying? They're paying usually maybe 0.5% above the risk-free rate. So now look at this in fairness. What you have, you're putting up more collateral and paying 11%. They might be paying 0.75%, right? And this is right now a big problem, because look how much more you're paying. So if the market goes up, let's say on average 5%, right? So if on average the market's going up 5% year over year, well, these guys kind of have it good. You over here, you can't. You're at a loss. You can't compete, right? And this is this right now is a big unfairness, right? That's going on. And I think that when you look at blockchain technologies and what they're doing by digitizing and saying you control your asset and could shop it around, it's going to start bridging that gap, right? So when you're looking at people, even like Jamie Dimon, he right now, of course, he wants this system. It's very unfair, right? It's like, why am I putting up more money and I'm paying not twice the cost you're paying, not 3 times, not 4 times? It's in the thousands of percents, right? And if I own my asset, why are you keeping the rent? Why am I not getting it? It's my asset. I paid for it. If it's truly mine, I should be able to tell you not to rent it out, or I should dictate how much I want. You can't do that right now. So when you're looking at the things that blockchain, and I'm just giving you some examples, in a credit card space, it's also, there are a lot of unfairnesses going on right now that the blockchain is trying to resolve, and we'll see where the regulators, where they come in and, what they say, but that's what I'm seeing.
Well, thanks to Rob, it's led to a great discussion in the chat. So thanks for that insight, Dee. We did have some questions getting back to the Chameleon, and there's so much crypto chat in between. I wanted to get to them. Wes was asking, when looking at the options chain, what is the long and short buildup trying to tell me?
I think that this was actually in the open interest over here, but I don't have time in that, but I am working on improving this. So I would say at this point, I'm going to wait till we
all right, so maybe we have a couple more questions. So maybe we'll have a whole post show on that when we're done with the updates. Enrico was asking, is there a graphical tool to visualize volatility and open interest quickly?
So if you're up here on the options chain, you got volume, open interest, volatility, implied volatility. So you could kind of go through here and just see the volume, and you have, just visually last 30 days, 12 months, by strike, by expiration. So you do have the tools right here. Same thing with open interest, by strike, by expiration, implied volatility. So that's from the options chain, right? So if you want to just do it from the options chain, you have this overhead that you have access to. Here's the stock volatility. Coinbase hasn't been around that long, but this is the stock volatility. So you do have these up top, but you also have on the side, you could go back in there and kind of dig deeper, right, with implied vols and so forth. So yes, I would say you do from the options chain. If you wanted to go deeper into a specific option, you could click on the option over here, and you have the time and sales here. We also have historical implied volatility graph for this option, historical tracking, so you could see, by date, the volume, total trades, volume, open interest, the VWAP, so that's the average weighted price that traded that day, the VWAV, the average implied volatility, and you have a breakdown of how that option traded. So that's actually going all the way down to the option level, to the single option level. And we could expand on those.
Great stuff, awesome job.
Okay.
A lot of thank yous, a lot of good discussion today, chameleons. Great job, my friend.
Thanks everyone for joining. Stay safe out there. Have a good trading day, and hope to see you guys on Monday.
Awesome. Trade in peace, chameleons. Listen, we do have a webinar with Felix is going to be back in the house on Monday evening. So I will put a link. Actually, I'll wait till Monday to put the link in the chat, but you'll see emails going out. Have a great weekend, everyone. Thanks for joining us. Bye, D.